Hey, how you guys doing today? This is Ken, master trader with Blue Capital FX, and what we're going to talk about is using the Fibonacci retracement tool. So we're currently on the USD versus the Canadian dollar on the daily time frame. So what I like to do is I like to go on my left-hand side and grab the Fib retracement tool, and I want to start where I could find the most highest part of the market, so which is right here, and I'm going to bring it down to the most lowest part. So this is how you focus on getting the most accurate entries by using on the daily time frame, by using Fibonacci tool. So now I'm going to revert going down to the 4-hour time frame, and you could see where all of these points are being hit, right? So 88 retracement tool, as you can see, that came up and came and formed a nice low high, right? So this is where you would have got your entry on the 88 retracement tool. It came down and came back up, came back, forming highs and lows, and then it came up right back to the 88 retracement. So what I would have done is that anytime that I see all these, so I put a rectangle. Perfect. So now I'm just cloning it. So these are my potential zones. So I like to put it in every level just in case that it does hit on these levels. So it gives you more of a clear confirmation. So on the 38, perfect. And then lastly, on the 23. So as you guys can see, it came down to the 78 retracement tool. Blast through it, came on your 61. But we know overall this is a downtrend market. So it came to 61, came all the way back up to 88. So using these fib retracement, you could use these as take profit levels. So when you see it, it comes up, you could have got this for a nice buy. You could see that black moving average following it as well, kept going up. So this is the most recent low. And it's coming back up to make a nice low high because this is the high of the market. This is a nice low high. So it comes back down. As you guys can see, if you zoom in, kind of forms like, a nice double top up here, like an M pattern, as you guys can see. So you would have entered right back into this zone, and it came all the way back down, forming low highs, came back down, forming low. So now overall, you see this as a double bottom. So when you see that it came into the zone, it's preparing to go all the way back up to that zone area. So that would have been my take profit. Now that is confirmed as a low high, and it's going to keep coming down. So you guys got to look at the overall picture on where the market's coming down. So we are going to be seeing low highs and low highs within the US dollar, but it's going to take some time. But you guys got to pay attention to where, and on a downtrend market, you're marking up from the top all the way down to the bottom. So now you just mark up your zones just like how I did with the rectangle tool right here. And you could have it as your favorite and then just clone the rectangle and then just have it highlighted in all these key zones. And it gives you that clarity of where it's going to be coming and forming highs and lows, if it's being respected within the zone or it's being rejected or it's forming low highs or it's forming low lows. So then you have that clear picture of where the market's heading down to. So you just follow that 66 moving average and it'll tell you the whole story. So with that setup, that's confirmation on USD CAD that is going to be coming down. So we are going to be seeing it coming down into here because it has to surpass this previous low here. So then I'll put a horizontal line here. So then don't forget, have your entries on the 30-minute and down for potential entries. Mark up your charts from the daily and 4-hour daily and higher to mark up your analysis. But I focus on marking up on the 4-hour analysis because it's just more of a clarity, and seeing every candle that forms every 4 hours just makes sense to do so. So it doesn't have to make you be on your charts so much, so having it there, you could set it, forget it. You could put, potential entries, and then you could go back every 4 hours, check on your MetaTrader 4 and see where the market is actually holding up. So now we're gonna go to a different pair so you guys could see on how to use it on an uptrend market. So let's go to the British pound versus the NZD dollar. So perfect. So daily time frame. So we're going to use the fib retracement tool. So fib retracement coming all the way up to that previous low high for the overall downtrend. And then we're going to go to the 4-hour chart. All right, so perfect. So now we're going to get the rectangle tool, and we're going to have it marked up all the way. Simple. So now we're going to clone it and have it on the 78. Clone this again. Major key level. So 61. 50. And 38. So you could see that, and then one more, have it. So usually I like to focus on the 23 is always being where like the market tends to, oh man, we have a double. All right, perfect. So on the 38, so where I see that's the last pull. Did I move it? Okay, I moved it way too many times. So let's clone this. One more time. So as you can see, so now we're going to break down on how this trade setup on the British pound became a bullish movement. So we marked it up from the top to the bottom, and you can see that it came through into the zone, came up. So now we got to look for the patterns. We got to focus on looking if it identifies a pattern. So it goes up, gets rejected on the 88. So it comes back down. So that's where we're looking for. So we wanted to come down here so we could get a nice buy entry, because you always want to be buying it low. So once you buy low, expect to have small pullbacks. Well, not small pullbacks, but overall pullbacks to get into entry zones. So this is where you would have entered here. Would have entered here. Right on the 78. Would have entered here. As you can see, right on that 61. Oh, I think I deleted them. Oh, not what I wanted. So here, clone on the 78. So perfect. Entry here. So as you can see, it went on the 61, retraced. So as you see right here, anytime there's a big movement in a market, so this is what we like to consider a range. So anytime that it's struggling like this, but you would have had your take profit anywhere on that 61 retracement. and have it be done. So you always have your take profits at the next level. I don't know why I have it cloned here. So perfect. So you would have had your entry on that nice pullback. Take profit would have been at the 61 retracement. Perfect. So you can see that it came into a range. When it's coming into a range, you follow where that black moving average is. Prepares to coming down. It's preparing to come down. So once it comes down, what I've always realized what it does. Let me clone this again. I don't know why everything just keeps jumping around. All right, perfect. So comes back down, but not too far down. So it breaks at 78. So now you can be catching it on both sides. So this is a nice retest on a downtrend. Retest. A small retest. Remember, the overall trend is a uptrend. So you're capturing it for both sides. So you see that it goes up, comes down to that, breaks down this 88 to form a new low. So you guys can see on the 88, what did it do? It went up, right? So now we're preparing for itself for an uptrend market. So we allow it to go back up and get rejected to come down to make a new high low. So as you guys can see, it's a W pattern that's about to be forming. So comes down here, you wait to see if it makes that W pattern. It does. So this is where you're entering right into the zone. Perfect. On the 88 retracement. Then a nice pullback right at the 78. Absolutely perfect. So it goes all the way up to my 61 retracement. So you can see that it's struggling. So it forms a nice triple bottom. So then you wait for a nice pullback and you enter it. So you can see that failed to come to as a bearish trend, but we all know that this is an uptrend. If you're following where the purple moving average, it will tell you that this is still an bullish market. So TP level will be right here for the 50. So you could have entered here, secured your profits from there. And goes up. So you could have had two take profits. So I like to focus on 3. So let me clone this here. So perfect. So you enter here, take profit 1, 2, 3. So you could have handled that small little pullback, could have re-entered it right there. And then you could re-enter right there. So this was the last pullback, as you guys could see. So this now is a dying trend now. So it hit my take profit 3 up here. Once it hit it, what's all here? This is empty, right? So it created a new high. So it's preparing itself for a downtrend market. So I hope this makes sense of using the Fibonacci tool of capturing it from a downtrend market and an uptrend market on how you could make money on both sides. You just got to know when the exhaustion is. So anytime that you see some consolidation it's preparing itself to come down for a low, high low, so you could re-enter it back in within the trend. So as you guys could see, now it's still doing high lows, right? So it came all the way down to the 50 retracement level. So it came into the zone still. So if I extend this, right? Still potential highs and lows of buy opportunities because it failed to come down to the 61. So it formed a nice low. So it surpassed this price area structure. So it went up and now it's creating highs and lows, highs and lows. So now it came all the way up and surpassed this previous high. So now we'll be seeing a downtrend market coming down to the downside. It could probably come down here and just create a low and still continue to go up. But overall, you guys could make money on both sides if you just allow the market to come into the zones and capture it and then use the previous Fibonacci retracement tool as your take profit. Awesome. So I'm going to go over another pair so you guys could see. So perfect. We're going to go on a daily time frame. All right, awesome. So see this previous high? We're going to bring this all the way down to where the market took off. Now I'm going to go to the 4-hour time frame. That's so perfect. So now we're going to highlight. So just know in advance, so Euro CHF, that's the complete opposite of what the Euro USD is currently doing, because the US dollar is completely different of how the Swiss franc is moving. So as you guys can see, it's a downtrend market, right? So what we're going to do is that we're going to clone all these and make sure that we have all of our major zones marked up. All right, perfect. And clone. Let's go. Let's get this. All right, awesome. All right, so perfect. So 88 retracement, that's right here. You see that it broke, came into the zone to the 78. So this is where you would have got sell opportunity. Perfect. So you could have came down. If it's showing a retest, yes, you could have gotten it here. But I'd rather see if it comes back into the zone. So which it did. So it came back into the 78. So this is another potential short and selling position that you could have got. So we're going to extend this here. Anytime that you see price come and retest previously high, just make sure that you guys are following. Make sure you're following the moving average, because moving average is kind of like basically your best friend, and it's just really guiding you. So you could pay attention to that 5 moving average. If it's showing that it's going to be a retest, then this is potential entry. And it breaks this zone, that means you won this trade setup. So it's coming down here. You don't want to enter sells here and think that its market is going to go here. For the way the market has to continue a downtrend, it has to go up first. The more that you keep saying this to yourself, If it comes down, it has to go up first, wait for a retest, and then you see that retest, perfect. So this is a nice retest, still a downtrend market. Comes back down, small retest. So after you see like, a big move, you're going to see a lot of consolidation like this. This is pretty choppy here. You want to look for trade subs that look like this for a retest and then capture momentum, like this for the retest and capture momentum. Yeah, this is a retest, but this is in the range right here. This is way too choppy. So I wouldn't be getting into any trade setups like that until it comes back into a zone area. So if it goes up to the zone area, that's a nice retest area for it to keep coming down. But if it doesn't do that, then don't bother getting into the trade. So I hope this was very helpful of using the Fibonacci retracement tool. And waiting for the key price areas. Don't forget the entries on a 30-minute and down for potential trade entries, and your analysis on the 4-hour or daily and higher time frames to analyze on the pairs. But as you guys can see, I was doing everything on the daily, marking up where the Fibonacci retracement, and then I do everything with marking up my rectangle zones on the 4-hour time frame, and then I get my entries from the 30-minute and down. So I hope this was very helpful. Stay tuned for the next videos. Make sure that you're taking notes. If you need to watch this multiple times, do so. This is really simple stuff that you could add into the main strategy and how I trade. And hopefully we see you making money and profiting with Blue Capital. So you guys have a good one.